This is Rob Weinberg, and on this channel, we empower people to take control of their futures through expert mortgage, financial, and real estate strategies. If it's your first time watching, go ahead, hit that subscribe button. Also smash the bell so you get notified on all of our future content we're putting out every single week. In today's whiteboard lesson here, we're going to be talking about the mortgage process, what you need to expect start to finish, specifically from the standpoint of a home buyer. There are a couple different milestones and steps during the mortgage process. So I'm going to break each one down for you and exactly what you need to know. The first and arguably the most important step is the pre-approval. The pre-approval is when you're going to reach out to a lender, someone that was referred to you, someone that was recommended by your realtor, someone like that. You're going to get in touch with a lender that's come recommended to you. That lender you're going to request a pre-approval from. Now, depending on how they do business, it's typically either going to be an online secure questionnaire, you can fill it on their website, or a phone call, a fact-finding phone call when we can conduct a little bit of information gathering about the mortgage, what you're looking to do, and all the particulars. The information at this stage that you're going to want to be prepared with is going to be your income and employment history for the last 2 to 3 years, as well as your residence history for the last 2 to 3 years, where you've lived, that sort of thing. So pretty basic information at this stage. The whole point is to get you in a position where we can review your credit report and see what type of properties that you are approved for. See how much of a mortgage that you can afford. So give us all the information that we ask for. And the way that I do things at the pre-approval is we actually validate and verify all the documentation. So we're going to be asking you for paycheck stubs, W-2s, bank statements, investment account statements, that sort of thing. If you're self-employed, most programs require a couple years of tax returns, recent bank statements, that sort of thing to validate your business income. So at the end of this pre-approval stage, what is going to happen is we're going to be able to issue a pre-approval letter to you. That letter is going to tell you and your realtor exactly how much you can afford up to. And it's going to be based on the information that you actually gave us. Now, during this phase, also run an automated underwriting when the underwriting system analyzes your credit and information. So we know we've got a solid pre-approval on our hands, not just something based on hearsay. But once that pre-approval is done, that's when you're going to switch into shopping mode. So this is when you're going to be starting to work with your realtor on finding properties that are going to work for you and what you're looking for. How many bedrooms, bathrooms are you looking for? Do you want a home with a yard, or do you not care about that? What area specifically are you targeting to live in? That's what's going to be done at that point. So the mortgage kind of goes on pause at this phase because other than running numbers for you, we can't move forward with the rest of the application until you're under contract. So during or between this pre-approval and application stage, that's when you're actually going to be working with the realtor to find a property. They're going to be negotiating on your behalf. You're going to be going and looking at properties online or in person. And ultimately, you're going to have a negotiation done. You're going to have an agreement between you and the seller of the home that's going to be negotiated by the realtor. That's going to then bring us to the loan application. So one of the major pieces of the loan application is the address of the subject property, the address of the house that you're purchasing. So we need that to complete the application. But once we have that and we have that contract, then we can move forward with locking in your interest rate and moving into the processing phase of the mortgage. So what's going to happen at that stage is that the processing team, sometimes your loan officer will do this, other times they'll have people on their team. They're going to go through a little bit more in depth on the documentation you provided, and they're also going to be requesting certain legal documents and other documents that are needed. For example, the appraisal of the property and the title search on the property. So those are things that are going to be typically requested during that processing stage. Now, the loan's then going to be submitted to underwriting. What does underwriting mean? Well, basically, this is when somebody who's an employee of the bank that you're dealing with or the lender you're dealing with, they are going to validate and verify all the information that you've given them. And they're also going to make sure that nothing else is required. They're going to ensure that the guidelines of the mortgage program that you're applying for are being adhered to. They're going to make sure that all the documents that are needed for that are in the file. And if they're not, they're then going to request them from your loan officer or processor. So during this underwriting phase, this is when they can come back and forth with you asking for additional information or additional documentation. This is totally normal and customary. It's not anything you need to really get worried about because it is typical that they're going to ask at least for a couple additional pieces of documentation. So that's the underwriting process. Now, when the appraisal and title come in, they're going to go back and be reviewed by the underwriter. But generally, the way it works is the underwriter is going to give a conditional approval, which is going to have some stipulations on it, some of which are going to be the appraisal and the title search. Once all those stipulations have been completed and we've gotten all the additional documents needed, then the appraisal, the title, along with all the other things are going to be sent back to the underwriter. Typically, it's for their final review because we're going to just do one final review in most cases, and then they'll be able to clear the loan for closing. So you can expect this processing and underwriting time. It can take a couple of weeks. We'll go into more timelines here in a second, but a few weeks is generally a normal time for that. Once the underwriter is done with your file, they're then going to give what's called the clear to close, or CTC as it's known in the industry, and they're going to push the file over to closing. That means that all of the prior to document conditions have been completed and the loan is ready to be scheduled for closing. We're clear to close that loan. So at that point, your loan officer or processor is going to reach out and let you know the good news. They're going to congratulate you. And that's when you're going to schedule the closing with the attorney or title company, the realtors involved and whatnot. And you'll then go to their office on the scheduled time and you'll sign the final paperwork, get the keys to your new home. So that's the closing process. But obviously there's a lot in between there. So let's talk a little more and get a little more in depth on some of the timelines, mistakes, things to avoid and whatnot. So timelines. When you're refinancing a home, the timeline can be very quick. There's not sellers involved. There's not realtors involved. It can be a very, very smooth and quick process. So on a refi, we can get these loans done in like 7 to 10 business days, especially if we have an appraisal waiver. But if you're purchasing a home, and most of you are, understand the general timeline is going to be like in a 30 to 45 day time frame. That's totally normal, and that's not slower than usual. That's just generally what it's going to take is 30 to 45 days. So understand that. There's a lot of people involved in that purchase transaction: the realtors, the appraisers, the home inspectors, the sellers, the buyers, all the real estate agents, attorneys, etc. So it's not just saying, hey, when can you close? There's a lot of different scheduling that needs to be done. People may have to take off of work. People may need to travel. So it's one of those things that you want to be flexible with when it comes to the timelines on. More so in most cases, it's going to be adhered to by the seller and what they're looking for and when they can close versus the buyer. Of course, it is a little bit of a back and forth, but most of the time the seller is going to really write the ticket of when it's going to close. They may have to get into a certain home, or they may not be able to get into their new home for a certain amount of time. So those are the timelines that you can expect when it comes to the transaction start to finish. Mistakes. This is something big because a lot of people come in thinking they know the process or what to expect, and they don't. So I want to hone in on just a couple important mistakes not to make. So first of all, information. When you're going through that loan application, that questionnaire up front in the pre-approval process, you want to make sure you disclose everything to your lender. So like if you pay child support, let us know about it. If you have a previous foreclosure, let us know about it. All the information that you think we may want, the more that you can give us, the better. It's going to make the process a lot easier. So be forthright in your information. The next thing is documentation. So when we ask you for documents, it's understandable. You may not have them immediately, but hopefully you can get those documents to us within 24 to 48 hours or less. I have some clients that get their documents to me like within a couple of minutes of asking, and that's great. But we understand people are busy. 24 to 48 hours is fine. Just communicate. Let your lender know how long it's going to take you to get this document to them so that they are aware and they aren't hounding you for it. And the next thing is job history and job changes during the process. Huge mistake people make is they think, oh, I'm switching jobs, but I'm going to be making more, so that's okay. Don't think that. Talk to your loan officer ahead of time. Make sure that switching jobs or switching positions is not going to be a problem, because many times it can be, especially if you're going from like a W-2 to 1099 or you're starting your own business. That can completely screw the mortgage process up. In many cases, make it so you can't even buy a home. So make sure you talk to your loan officer about job changes or position or salary changes that might be occurring during the loan process. And the last thing I want to touch on with you guys here is technology. You know, this mortgage process, getting it down to where it is now, I mean, there's a lot of things that have come into play to do that. Technology now is used more than ever. But what's the future with technology? I think we're going to see artificial intelligence when it comes to underwriting these loans. I think we're going to see artificial intelligence when it comes to appraising properties. We're already starting to see and hear some of the rumblings of that with Fannie Mae and Freddie Mac. So I think there's going to be a lot more technology used in the future that's going to make this process a lot quicker, specifically the processing and the underwriting phases. We already have a lot of intelligent and automated underwriting at this phase, the pre-approval of the application. We have electronic closings going on many times in the closing phase, but this middle ground, this processing and underwriting, is where I think there can be more technology used. So anyways, I hope this helps you guys. I hope it gives you some good information on the mortgage process, what to expect, and some things that you can do to help it move along. So as I said earlier, if it's your first time watching, hit that subscribe button, smash the bell, share this video with someone else. Somebody that may be looking at going through the home buying process, somebody that's thinking about buying a home in the coming year, get this video over to them. Also, comment or reach out to us by direct message and let us know what other content you're looking for that we can bring you to help give you more knowledge and education on real estate and finance. Now, I do offer personal consultation, so if I can be of assistance to you or someone you know, I'm licensed in Connecticut, Massachusetts, and Florida. You can reach me at 860-413-3938. As always, hope that helps, and we'll see you next time.